Hey guys, hope you're all doing great. In today's analysis, we're going to be taking a look at gold, US oil, and Bitcoin. If the first time you're joining us and you find Bitcoin very helpful, please like, share, and subscribe. Also, if you want to learn how to trade like a professional forex trader or you like what we do here at nfxhub.com, then I strongly recommend you subscribe to our membership plan at nfxhub.com and also join our Discord community where you can get access to real market insights, news alerts, and all that helpful educational content to help you become a better professional forex trader. All right, guys, with that being said, let's get on chat. Yeah, on chat, we're going to be starting with BTC-USD, which is Bitcoin. And I chose this for a specific purpose because there's not so much changes with the gold and oil chat, but we're going to touch on that shortly after. So Bitcoin has been in a very critical state this past few weeks, and we saw the market stall around the from July. We made the all-time high in August, and that all-time high got broken in September, which has caused a big problem in the markets because these breakouts kind of like invalidates the excuse me the halving cycle thesis, which state that the all-time high is often reached before the end of the 1.5 years. So the currency we're seeing in the market right now is that there's a lot of indecision in the market because a lot of people are not certain if the halving cycle still works because this was a bit delayed. It might still be effective, or it's completely broken. It's saying the recent high level of ETF inflow, which doesn't really make sense for a peak. Usually during a peak time, we don't see that high level of inflow, usually from institutional investors. This period is supposed to be time for cashing out. So if we're still seeing that level of inflow from the ETF, it tells us that there's a high possibility that the market has not yet peaked out, and we could still see another leg up. But for now, we're in this very critical state, so we must be very careful. I actually chose not to trade Bitcoin for this next few weeks. I'm just watching to see the price action movement. Now, this is a trend I drew from January 2024, and we can see the consistent price movement. So this was the first time we had March 2024 highs, and we broke out by November 2024, and recently we saw the next breakout. I'm gonna just copy this and show you guys something. So we saw the highs of December 2024. We saw that being broken out by June 2025. So since then, we've been in this current state. Price has been ranging between the 2024 highs, that's December 2024, and the recent high of August, which was in 2025. Yeah, of course. So that's the current recent highs. But this is a very critical state because price has been within these two zones for a very long period of time. This is almost I think 3 months, if I'm not six. This is June to uh October. That's the July, August, September, October. That's 4 months, and nothing has changed. And this is a very strong consolidation phase, and I think it's mainly accumulation. If you can see, the volume is very low. It's neither high level of sell nor high level of buy. So this does not indicate the end of a rally. The profile doesn't give us any indication that the rally has come to an end. It's more like an accumulation era where a lot of people are selling, some people are buying, and mainly we've been seeing a lot of institutional inflow since July, as we can check that on CoinGlass or CoinMarketCap. You can see that there. So as far as this current support is still holding, there is high possibility for us to see price retrace back up towards the all-time high and likely head higher. So this is my long-term target, 160k, and I took that because we have a similar move here from the last time we broke out from the March 2024 highs. So if I pick that here, and we can see the current retest, if this does not break below, and even if it breaks below, it's very close to the trend support, which tells that it might happen very fast, maybe towards 100k, or 98k, depending on how long we see this consolidation last. But it doesn't look like it's going to break anytime soon. So if this holds, and the coming week we see a bullish week, we could likely see price work its way up to 160k. This is where I'm considering as a peak for Bitcoin before we can see major drop. So for now, I'm still very much bullish. I'm not I'm not as bearish as I used to be. So I'm just keeping a finger crossed. I'm watching the market to see how the market is going to react this coming week, especially this week and next week, to see what happens. Don't forget that the US is still on shutdown, so a lot of things are being slowed, you know, in the markets. Market is a bit lagged. So this is what I'm watching. And even if we go to the lower time frame, you know, for intraday activities, there's too much noise, but we can still see that the trend is likely changing because we've been around the support level for the moving average, 200 moving average. So there's a high possibility for us that this week could be a bullish week, and following the reversal candles, we could see price, you know, ascend back towards the 124K, and that's going to indicate that the halving cycle theory is completely dead. We can't work with that anymore again, because that cycle theory will not make any more sense, considering that we're making new all-time highs post 1.5 year after halving. So guys, this is what I'm watching out for. I'm not trading on Bitcoin right now. I'm just watching to see how the market plays out. Of course, I'm gonna be looking, if I'm gonna be taking any trade, I'm gonna be looking for a buy trade, but the market is very dicey right now, so it's not so it's not ideal to trade. It's better you just wait and watch for confirmation to see where the market is gonna be channeling to, because if we get any break below these 105K supports, then we're likely going to test back the support, the trend support level, which is around 95K. And if but that's very unlikely, because given the market strength, you know, if we want to picking up these lows, these still that we probably are on the peak. We don't need the highs, we just need the lows. So this is still where we're currently around the base, you know, for the trend. So we should expect a reversal towards all-time high again, or minimum around 120K, 180K before we see further dump, if we're gonna get any further dump. But I'm more on the bullish side, so I'm thinking if we get above here, any reason will make us break all-time high, we're gonna be going straight towards 160K, and that's likely gonna happen. By my calculation, gonna happen before the last week of November or towards December. So that's what I'm seeing here. And guys, if you're trading this, be very careful. The market is very choppy right now, so trade with care. So that's it for Bitcoin. Next I'm going to be touching is Ethereum. So Ethereum, on the other hand, very similar to Bitcoin, is still at a very critical state. So if you watch, excuse me, if you watch the current chart I'm using right now, it's also the weekly chart. You could see, I'm going to just color this so we can get more clarity. So if you look at this chart, this would be good enough for us. Yeah. So if you look at this chart, you can see Ethereum has been moving within the midpoint of this channel. You know, this is from 2020 to 2018. You know, that's the 2017 highs, 2021 highs. These are my two peaks. So 2025, we have not seen the peak rally of Ethereum. So where we are right now, we're currently around the resistance. This is the 2021 highs. We've not even broken through 2021 highs. So recently we saw price try to break above 2021 highs. That was in September, but that did not work. We still stored. So I believe that this market has a lot of room to go. If you check, if you pay attention very much, you would see something very unique, right? You can see the volume profile around the all-time high. We see a series of heavy spikes, you know, heavy spikes that sustains for a while, that sustains for a long time before it ends, right? The same thing, we can see the same profile here towards 2021. We can see the same profile, heavy bull, heavy buy candles, heavy buy candles. You know, this is what leads to those euphoric price movements before we start seeing the dumps. Right now, throughout 2023, all 2024, down 2025, we've not seen those ecstatic price movements. We've not seen it yet. And this tells us that we've not experienced the euphoric bull market yet. So it's very hard to say the bull market is over when we've not experienced the bull market, right? Market has been in a very long-term consolidation and accumulation phase, and is ready for a shootout or the blowout phase, but no one knows when it's going to happen, you know, because largely this year we had the stock market take a chunk pile of the lower financial liquidity, because most of the stocks did over 10x, 15x. As you can see with Nvidia, Palantir, and so many of the MSFT and some of the AI platforms, they had the rally. So I believe that crypto is a bit late to the party, but it doesn't mean that it's not going to get its own share of the cake. So it's just going to take a little bit more time, and I think things are a bit delayed, but we just have to be very patient. So this is currently the last all-time high. We've not exceeded it, and we still yet to break that. When we break this, that's when I believe we'll start seeing heavy buy volumes, on the profile. But for now, we're still in a safe zone, and we need to get out of the safe zone. So as soon as we break this all-time high, then I'm expecting to see price head towards around 16K, because that's my fair market value. Not doesn't mean we must see price hit 15K, but there's a strong possibility for us to see Ethereum make the high towards that level, and it's not so much because you often will take just the average height of these things. So if it gets towards this price, it's a fair bargain for us. But for now, guys, be careful, trade smart, trade with care. The lower time frame on Ethereum is not any much, giving us anything better. It's similar to that we had with Bitcoin. I'm just going to take this color out so we can get a clearer image. It's very similar to that we had with Bitcoin. Market has been ranging. When we hit this all-time high and the support level, this was support level from 2024. Yeah, 2024 December highs. The same thing with Bitcoin. Price has been around the all-time high level and the support level, and that's why I still strongly believe that there's a lot of room to go on this market. The market is not yet over. The halving cycle thesis is not going to play out. We can see there's this strong indication for the bullish reversal coming up soon. Of course, we don't know when it's going to start, but there are signs of bullish reversal coming up soon. And the recent, market shakeouts by the tariffs war between the president of the United States and that of China, it's already priced in. So now I'm expecting to see that if we get any more leg up to see price retrace back towards the all-time high, I expect us to break above all-time high, and that all-time high becomes a new support. Because right now we're working with 2024 support, we need to work with 2025 support, and that will be a very historic moment for both Bitcoin and both Ethereum, and for every crypto trader investor out there. So guys, just keep patient. This market is not over at all. I don't believe it's over. It's still got a lot of room to go. So moving forward, we got USOil. Now, USOil is currently at a very critical state too, and price has dropped so low towards the 10-year, a decade support level. This is from 2016, and that's where we're going to see price at. And I believe that I strongly believe that we'll see price dip a little further. We had like 3 weeks, 3 consecutive weekly close in a bearish pattern. Of course, most likely this could drop a little bit lower to test around 55 level or 54, that range, before we see a bounce. But I don't think we're going to go any lower than that. Except oil is going to crash, and I don't think it's possible for oil to crash anytime soon. The supply has been controlled, and the supply is very much controlled. I don't think it's going to crash anytime soon. We're going to see oil reverse back up. I'm expecting something like this to happen with oil. We already have the first support level, total support level. I'm expecting to see something like this happen, and we get the bullish reversal. That's my expectation. I don't think oil is gonna crash or something bad's gonna happen. We're gonna see of course, short-term correction, but then price is gonna reverse back up. It's a very common pattern we see with this descending triangles. When this happens like this, and we get the breakout below, we're going to see price return higher. Of course, most people, by textbook definition, most people expect us to see price go towards the height of the breakout level, but then that's not the case I'm seeing right now, because the first breakout did not continue, right? The first breakout was invalidated by the reversal, and that was too strong to test back here again, automatically making this setup nearly fully validated. So ideally, if we get the breakout and it continues, or it consolidates below the breakout and it continues, then we expect to see the height of the triangle, right? But in this case, we already have this first invalidation. which was not good, and that's made our thesis partially wrong, and following the correction, we didn't see an instant rejection. Price consolidated within the triangle, so this is not valid, and this likely will not be valid. So I'm expecting the double bottom. So if we get this, we already have this bottom here, right? So I'm expecting another one towards around this level, which would likely make price test $55 again, or probably a dip towards $53, and then after that, support, two lows, I'm expecting a full bullish retracement, and I'm expecting price to go way back up towards $100 for oil within the next 3 to 4 years. So for now, guys, I'm not taking any trade on oil. Likewise, I'm just watching the price action to see how low it goes before it times out. So guys, if you're taking a trade on this, be very careful. On a lower time frame, we can see the market is still in a bearish state. It's still in a bearish state. These are not sign of a possible reversals. We're not seeing any good sign of that. So I'm expecting that if this continues, we could see the price dip lower towards this level before a retracement happens. Alright guys, that's all for USOil. Next is going to be gold. So on gold has been in a very classical reading. I think the market is seeing a secular bull market. This has been going on since I think 20. I'm going to go all the way back and show you guys something interesting about the gold market. So this is the daily. I'm going to go down to the weekly first, and let's see where this rally started from. So first we had the rally from 2000 year 2000 up to year 2011, right? And then we entered into this short-term bearish market from 2011 down to 2015, and now I'm going to separate these with colors just to give us some clarity. And now we are having another bull market from 2015, and this is 2025, and I think it's going to get up to 2026 before it starts tanking. Now the first rally from 2010 to 2011, that's what's 11 years, right? And then we entered the bearish correction that lasted for 2011 down to 2025. That was roughly 5 years or 4 years, let's say 4 years. And we had the new secular round that has lasted from since 2015 up to 2025, and that's 10 years now. So I believe this will likely continue to 2026. The reason I'm saying it's going to continue, not because I'm expecting the harmonic pattern, but because I'm saying the fact that this is already the last quarter of 2025, and we're still seeing, I'm going to take this out now since we're done with that. So we're still seeing the market poised with so much geopolitical tension. There is still uncertainty with the Palestine and Israel war. Talks of peace is at this current state sounds mediocre. So there is still reason for interest in safe haven assets, and gold of course is the best safe haven asset. And also the tariff war between the US, China, it's a big problem, right? And also the talks about the de-dollarization between the BRICS, the Russians, Chinese, and also these are strong factors that are affecting the dollar. So a lot of countries are buying. The current purchase of gold is not even retail. It's more about the sovereigns, the central banks. These are the people who are buying gold, and they're buying at very controlled rates, which is the reason why we keep seeing gold go higher and higher and higher. So this rally, of course, is going to end at some point. Maybe 10 years. Maybe this year is going to end. Maybe next year. But I think most likely it's going to last the next year. We may see some significant drops, but maybe not something very heavy as a lot of people are expecting because of the tension globally. So on the lower time frame, we're going to go down to the 8-hour time frame. Following the breakout from this our long term the ascending triangle, which broke out earlier September. So we've seen that within September, and now gold has rallied a lot just in a very short period of time. So this conclusion lasted from April up to August. That's April, May, June, July, August. That's 5 months. And within 3 months, we've seen these rapid movements. You can see the percentage growth. It's a lot just within 3 months. This was 11%, and imagine how many percent growth from that time. We had about 25% growth within 3 months, and this was about 5 months. So that's why I'm still thinking that even with Bitcoin we can get something similar, even something better within this last quarter of the year. So that aside though, so gold has been in this movement, and for a long period of time we've been having, price moving within the zones, and I try to map that out because I've been tracking this for quite a long time. So we have this equidistant zones. We saw the first the initial state, and so the first zones price hits, drops, hits, drops, hits, drops. It continued like that, and until this recent price movement where we've been in a rapid parabolic run, which is the strong reason why I believe that we should see a strong correction before a continuation of the trend. But I don't think this is the highs for gold. I believe we could still see a new all-time high, given the whole geopolitical tension and everything, except something changed, which is why lately I've been very, very flexible with the macro stand because there's too much uncertainty in the market. So if anything changes significantly, then I expect us to see a possible long-term correction for another 4 years. But at the current state, there's nothing has changed. The demand is still very high, and I believe we could see this short-term price retracements given the swing low and let's see high. So we could see price drop way back down towards the 50% 500 retracement level. That will be around 4150, or a possible dip down to 4100, and that's because within this last run there was no consolidation. If you check the previous run, we rally up, consolidate, rally up, consolidate, rally up, consolidate, rally up, consolidate, rally up, consolidate. But then from here we have not had any significant consolidation since the rally up. So I'm expecting that obviously price will trace back at least 50% from the last swing. So that will put us at either 4150 or the possible dip to 4100. That would be very healthy in the continuation of the bull run. So of course, I will never advise to short gold. Given the current situation, tension is rising every day. We could see a reversal from this point or something much later. So it's always best for you to patient, wait for a significant drop. If this is sustained and we see a clear reversal within the day, then we're going to continue. Right now, it doesn't look like a bullish setup. It's most likely look like it's going to drop again because we are having this. This is a bearish consolidation, not a bullish consolidation. So we could definitely get a movement like this, and down. But for now, guys, fingers crossed. Just watch and observe what the market do before you take any position. Right now, it's too risky. It's much tension globally, and those are big factors on the market, not just the technical aspect of the market. All right, guys. With that, I conclude today's analysis. If anything very helpful, like I said, please like, share, and subscribe, and also join our Discord community and join our membership platform on nfxup.com. All right, guys. See you guys, and cheers.